You have no plan, no strategy, no playbook. You just wake up, roll out of bed, you come and sit down at your desk, open up your broker, you look at the charts, and you start scanning the internet for some signal that you can follow. You're looking for this call out, you're looking for a bot call out, you're looking for something to tell you what to do. You don't actually have a plan and approach to the market, which is why you're losing money. So in this video, I'm gonna give you a simple playbook. I've talked about this at a high level in a lot of my videos, really. I trade around VWAP and the POC quite a bit. So in this video, I'm gonna talk about just a few things. One, what is VWAP? Some theory around, what VWAP is and why it's important to us as traders. And then lastly, we're gonna actually look at some practical examples. So stay tuned to the end. If you're looking for more plays in your playbook, guys, this is a simple one. It'll hit at least a few times a week, not every single day. It depends on if we're trending or if there's extreme chop. So caveats on every single thing that I say. Guys, you have to use the context of the market. So a lot of you guys like to come to my comments and be like, well, this doesn't work 100% of the time. Well, nothing does. This is just a tool in the toolbox that I'm giving you. If you're new here, my name is Forrest. I'm a trader. You can join us in the Discord. We have a 7-day free trial. So go ahead and click that link, guys. We are in there every single day live streaming in the Discord. Specifically, you can see for yourself. We do our call outs. We do live analysis. A lot of stuff that I talk about here, we're doing in real time, really all the time. So this is like the condensed, summarized for YouTube version. You can get it live every single day. And we do have a free chat if you just want to hang out with us. So let's go ahead and talk about what VWAP is on the other side of my studio. Cool. So real quick, we can see that we're at 3.34K subs, guys. My channel has been exploding. That's totally due to the response that I've gotten to you. A lot of feedback. Keep the feedback coming. Keep commenting. Let me know what videos you want to see. Those are the videos I'm going to make. Those are the questions that I want to answer. That's what I'm here for. That's the only reason that I do this, and don't just only trade, is to help as many people as possible, because that's how I got into trading, through other YouTubers like Humbled Trader, Lance, Day Trading Addict, and a bunch of other people like high quality, YouTube traders. So yeah, we're at 3.34K. Please subscribe. I appreciate it. I'm gonna do that one more time. One more take. As you can see, guys, real quick, we're at 3.34K subs. All I have to say is thank you to each and every one of you. I could not do this without you. Please keep commenting, keep asking what you want to see. I'm here to deliver. That's what I'm here for. Let's go ahead and do a quick Google search for what is VWAP. So we're going to start with the Investopedia definition. I think this is a great resource. By the way, if you're just looking for a quick, what does the acronym mean? Come on over here to Investopedia, guys. So the volume weighted average price is a technical indicator. It's one of the lines on the chart, and we're going to jump over to the chart and look at exactly what it looks like. But it's the volume weighted average price. So that's literally what it means. So think of averages. The average between 10 and 20 is 15. But what if you made one of those data points more important, and you made the latest data point more important? So what if you got the first data point was 10 and the second data point was 20? And so you weighted, let's just give the 20 a value of 2. So really you have 10, 20, and 20. So the averages of that number is, I don't know, let's do some quick math. We could do 10 plus 20 plus 20 is equal to 50. And then what's 50 divided by 3? The weighted average of that is 16.66. That's exactly how VWAP works. So it says here it looks similar to a moving average line, but it's smoother. VWAP represents a view of price action throughout a single day's trading session. Retail and professional traders may use the VWAP to help them determine intraday price trends. That's exactly what I do. That's exactly what a lot of people do in general. And it says VWAP typically is most useful to short-term traders, which is really, really important. So going down here, it says understanding the volume weighted average price. VWAP is calculated by totaling the dollars traded for every transaction, price multiplied by the volume, and then dividing by the total shares traded. So you have the cumulative typical price divided by blah, 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 blah. So the point of VWAP, though, is to get an updated average of the price. It's weighted by volume. And then you can see here the actual math for this. And so transactions where there's more volume have a heavier weighting. This is really, really, really important, because just like in the example that I gave, we gave the 20 a weighting of 2. So we basically had one transaction at 10, two transactions at 20. That's how the volume weighted average price works. You're not looking at the average price in the auction. You're looking at the average price in the auction based off of the transactions that happen at that specific price. It's pretty simple. Let's talk about, and this is the point too, understanding what VWAP is very, very simple. Why is it important though? And this is going to go into some of the theory. So I'll pull up the chart here. Don't really need it just yet, but this is my NQ chart, and we see here a few lines. This is actually a really good live example. The market just opened. And so I have, let's get rid of some of these. Let's get rid of the volume profile. We'll hide that. Let's get rid of the session volume profile. And all we have right now is VWAP and its bands. So we have VWAP as the blue line. First standard deviation band is green, and the second band is yellow. Let's not worry about the standard deviation. Let's just worry about this blue line. Averages. Averages are important. Humans understand averages, even if you're not a mathematician. people understand averages. If I asked you, what was the average sale price of a car? That's a common question that people ask. Or if you go to a neighborhood to buy a house, what was the average sale price of houses? The reason why we're so interested in averages is that it gives us an actual technical indicator of a fundamental question, which is what is the general sentiment in the market, right? An average is kind of in a sense a sentimental or fundamental indicator on sentiment. And that seems pretty loose, but that's how I think about it. That's why it works so well. It's because as humans, as people, we fundamentally ask this question a lot. We want to know what the middle is. We understand that there's extremes. We understand that there's, people at one side of the auction. We understand that there's people at the other side of the auction. And we always want to know what is the middle. Even if there's not too many transactions happening at the middle gives us an idea of the entire environment, which is why it's such an important and fundamental question. The reason that VWAP works as an indicator so well on the intraday session is that so many people look at it. So it's one of those self-fulfilling prophecies. It's a great indicator. It's a great target to trade into or off of. I like to trade into VWAP more often than not, but I have started taking more trades off of it more recently. But really, I use it as an exit line. So let's talk about how we might do that. And we're going to use this example right now. I actually just closed a trade. I was short, got out of that. We're going to ignore kind of the macro thesis on this. Otherwise, this video will be way too long. I just want to talk about VWAP. So let's imagine looking at the market right now, where I think the market might revert to. So we have a downtrend. We're on the 15-minute chart. Price action is going this way. We have a bottom wick right here on this 715 candle. And I'm looking for, where do I think, let's say if it goes up from here or at really any point in time, what is a good price to exit at so that I don't get smoked? Now I could go for the top of the range, which would be right here at 15,933. I could do Alt J to do a line there. But the way that I like to use VWAP is the market likes to get back to VWAP. So anytime we get away from the average, we like to move back to the mean, the average. And that's exactly how I use it. It's not the only average in the market, by the way. I said that I do this with the POC as well. There's a lot of context for that. I don't have the volume profile on the chart right now, right? So you can imagine that I have these mixed strategies and I look for confluence amongst the strategies. Sometimes if VWAP and the point of control, or POC as I mentioned it, are on top of each other, I'll use those as confluence, but we're going to ignore the POC for now. But I just want you to remember that when you're utilizing this strategy or this, you should look for confluence with the other tools that you use. Some people might only use this and that's fine. I think that confluence gives us more green lights, right? So you shouldn't have too many indicators on your chart. I really only use the volume profile, this, and then, I have cam pivots on other charts, but you want confluence between these levels. If this is, say, the rule of three, it's a great way to think about this. If you can have 3 levels of confluence, either to enter into a trade or to exit to a trade as a price target, as a level that you're pretty sure the price is going to get to, you will find, and you need to back test this for yourself, do not take my word for it, but you will find through your own data that very often it will hit those prices where there is exceptional levels of confluence. If you have 4 levels there, it will hit those prices. Sometimes it'll go through it. That's fine. You can work on adjusting your target. We can see here that we got a little green candle, and maybe we do get the VWAP on the 15, but that's how I use it. So what I would look for here is I would first try to identify, and we're gonna do this live example. I was actually gonna look at, we'll go back to Friday's price action here in a bit, but we want to understand what is the technical setup. But technically, and being technicals are just drawing lines. This is the simplest way I can put it. If you're a brand new trader, when people are technical traders, they are looking for places to draw lines or shapes. You see people talk about, trading astrologists and how people end up with all this stuff on the charts. And that is the extreme meme version of exactly what this is. They're not wrong. The joke is rooted in reality. Ultimately, as a technical trader, whether it's VWAP or anything else, you're looking for some lines. So let's draw a line right here. That's one line. Let's go ahead and draw, I'm going to do 2 because we do have kind of a break in price structure here. So we have one there, which gives us 2 lines that are opening away from each other. And then let's do another line from here to this peak here, gives us this wedge. So in this situation, I want to see which of these gets respected. We need to reject and come up to here, one, to validate either of these shapes. So this support line, this bottom support line needs to hold here. But really what I'm looking for, because this is the overnight session on Sunday, it's Sunday where I'm filming this video. I'm not looking for a huge move right now. Really what I'm doing, I took a little scalp earlier, but my actual trading plan for right now as I'm filming this video is to wait until 7 a.m. And see what happens to get a better read on the macro. But if this was RTH and I went long right here, I'm looking to exit at VWAP. Because if this is a downtrend, we're going to bounce off of that level. We're going to reject that level and ride the bottom of this range like so. So we would come up to VWAP, come down here, and then crack through the floor and do something like that. That's how I trade it. In the regular session, let's say we have a range. Let's get rid of these lines. We'll do some more examples. And we're going to use our imagination here because price action can do all types of things. Sometimes we trend, and you can use VWAP for all of them. So let's say that we end up in a trend up motion like this. Boom, 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 boom. something like this. This support area here very often is VWAP, or it's one of the EMAs. You'll see that we're riding the EMAs, and then we'll have VWAP down here, and then we'll get a big pullback. We'll crack that and we'll bounce off the VWAP line. That happens a lot. So VWAP becomes that fake out level on trend days that a lot of people get smoked at. So a lot of people get trapped as buyers. In this case, you would be a trapped seller in this case. So let's just redo that again to re-illustrate the trapped sellers. So we have our price action goes like this, like this, comes down, boom, comes off. So the entire time it was rejecting this EMA talked about, we're not really even talking about the EMAs in this price action. Then it comes down, whipsaws. The entire time the VWAP was trailing down here, and then it gets rejected right off of that. So you can use VWAP like that on a trend day. Another way that you can use VWAP is in a range day. You have a range like this, boom, boom, boom. I'm looking for it to sweep overnight highs. So overnight high sweep is a play in itself. So whenever I have an overnight, I'm technically giving you guys 2 free plays here. So overnight highs in this case, overnight is from Thursday close session coming into, well, let's rewind. I misspoke there. So this is Friday. This is Friday's session here. So we have this relative high here. Let's just imagine that this was some overnight high. I got too far in my imagination here because we're in Sunday. The market's barely been open. But let's imagine that this was overnight highs. Anytime you're looking for an overnight high sweep, I'm looking for a sweep of this level here. Come up, boom, we crack it. I'm looking for my target, my price target on that sweep of the overnight high or the overnight low sweep is going to be VWAP. It's always VWAP. Anytime I take that reversion trade, when we sweep the overnight high or the overnight low or the previous session high or the previous session low, whatever that is, look for VWAP as your exit and you'll see a lot of respect there. You're also going to notice that I have these bands, right? So the first standard deviation band in green, the second standard deviation band. So a standard deviation is, what is a standard deviation? Standard deviation. A statistic of standard deviation is a measure of the amount of variation or dispersion of a set of values. So very often people think of this image when they think of a standard deviation. So one standard deviation is really the values right in there. Then 2 standard deviations is from here to here. Or sorry, this is 1 standard deviation here, 2 standard deviations here, 3 standard deviations. So the population of data, of most data, is here in the middle. If this is too much math for you or complicated, don't worry about it. Just think of it as we have a set of data and we want to understand what like one extension of that data is. You should look into the math of this. It's useful to understand this if you look at more derivative, indicators and things like that. But that's what these bands are. So we have the 1 band and the 2 band. As you get further away, further standard deviations away from the average, we should expect less of the price action there, which is why they are good levels to take trades off of. Let's just go back to this really quickly and just so I explain this. So if the height of this is transactions that we expect in that area, we see within 1 standard deviation, we see a lot of transactions. 68.2% of the transactions happen. And then on the 1 standard deviation on either side, there's 13.6, and then 2 standard deviations or 3 standard deviations. It gets even lower. So we should expect the number of transactions happening at these deviation bands to be exceptionally low, which is why they're great targets for reversion trades. So if we were to hit, we just undercut this first standard deviation band and we see that we're riding the second. We're riding the standard deviation band. And I would take along here, coming back to VWAP. So VWAP really is just a tool. It's a great place to look for the market to hover around. Some of the other things that VWAP will do, or can give you an idea for, is a change in price action. So let's go over to Wednesday's kind of a bad example. It's a very, very choppy session. So here's kind of an example here. So this is Friday, pre-market Friday. And anytime we cross, so we were wedged around VWAP here, which really is just tight consolidation. We moved away from it. So once we started cracking these levels, this is very, very bearish. But then you see that we put in all of these bottom flags. So this would have been a good long to VWAP here. Once we cracked VWAP here, so we bounced here, we cracked here. Here, I would be looking for a change to the upside. Now, looking back, we know that didn't happen, but that's not the point. We didn't break this high. We didn't break this relative high, which is, it was safe that we were going to revert back down. But as soon as we cracked VWAP on this reversion here, I'm immediately looking really hands off to see if we break this level. If we break these levels here, then I'm thinking, okay, I want to take a breakout long. And you can use VWAP like that. So if we would have broke about this price area, then I would have actually taken a breakout long trade, because VWAP works as kind of a line in the sand to tell you what is the theme of the price action. So you can use it like that as well. I use it like that all the time. And you'll notice here that even though I have the power of looking back, I explain the trade kind of as I actually saw it. And that's really important, guys, when you're thinking about price action, how you actually read the market. You should always have an up and a down thesis. I talked about this in one of the videos I did recently. I can't remember which one, but don't be so locked into a bias. You just have to understand the mechanics enough to know that, like, if we pass the POC, if we break VWAP, I need to be looking for some of these these expected outcomes. Then I'm looking for volume coming in that trade. I'd be looking for volume on the green candles, showing that we're going to be a breakout. Didn't happen. Okay, well, if we don't get a breakout on the move that is breakout-ish, that looks very breakout-ish, that gives me further confirmation for the downside. So there's layers and levels to this analysis beyond just do this, win that, which as a discretionary trader, you need. It's also the hardest thing. And, I think this is what trips up newbies a lot when they're just looking for, videos like this, quite frankly, where they're like, just tell me what to do. This is a tool. These are pieces of a puzzle that you have to apply in real time all the time. So that's a way that you can use VWAP. I think if you take a step back from even the charts and the price action and remember that the market is an auction and that people are always trying to get a good price, that is why VWAP is so respected, because it helps us answer that fundamental question as people of what is the average? What's the middle? And so if I'm buying below VWAP, if I'm buying below the average, I feel like that's a good price. And if I'm selling above the average, I feel like that's a good price, and vice versa. So if I'm buying above the average, well, that doesn't feel good. If you buy a car above the average price, that doesn't feel good. And then if you sell your car, say you sell your car below the average sell price, that doesn't feel good either. And that's exactly how the auction works. That's exactly how it works. That's why VWAP is so powerful. Now you have to understand that there's millions of players all participating and making these choices in real time at the same time. But in the aggregate, this forms trends that we can form opinions about and play off of to a degree of confidence. Another thing that I'll say, because it's super duper important, and I kind of iterated on this earlier, I actually have a video talking about how the market is poker, and I'll let that video come out. But think of the market as poker. So these trades, these setups, if it doesn't hit one time, that doesn't mean it doesn't work. Some trades might hit 8 out of 10 times. Some might hit 9 out of 10 times. Some might hit 6 out of 10 times. You need your own data for you to understand how you read this and how you trade off of it and your accuracy. Only way that you can say whether a strategy works or not is by looking at your data. I can show people my trades and my P&L, but trading comes down to execution, and execution is based off of emotion. The best way to harden your emotion when you're trading is to have your own data. I use Notion. I have free journals. Definitely check out our journals, guys. Click the link down below in this video. There's a WAP link there. There's free journals. Journal your trades. There's things like TradeZilla. Journal your trades. You have a notebook. Journal your trades. It does not matter how you journal your trades at all. Obviously, there's better ways to do it, but don't let perfect be the enemy starting or good enough, right? Don't let perfect be the enemy of good. You have to start, and by journaling and doing the practice of writing out your thesis, you will have better thesis overall, which will make you a better trader. And one of the few things that I can guarantee is that you will feel like you are a better trader and you're actually trading how a real trader would when you're actually journaling your trade. So I highly recommend it. We're done with that tangent though. But if you have any questions about VWAP or how to trade, this is very simple. This is not overcomplicated. If you're like, oh, that's it. That is it, guys. This is very much how I trade. I think trading is simple. You do not need to overcomplicate it. A lot of you guys way overcomplicate it. You're looking for too much. Price is either going to go up or it's going to go down. And you just need a reason or a thesis that you're confident enough about to bet on that. Sometimes it goes sideways, but in a market with a lot of players, price hardly ever actually goes sideways, right? The market is always moving. Even if it's moving slow, it's always moving, right? It's going up or it's going down. In any case, that is it. My name's Forrest. I invest in stuff. I think that everybody should too. Thanks for stopping by, and I hope to see you in the next one. Peace.